Hey, what's up, everybody? Welcome to Capital Cosm. And in today's episode, we're going to talk about a pressing topic on the minds of many uranium investors, and that is nothing less than the boring, stagnant price of uranium that's been going nowhere over several months now. We're going to look at what could be a potential cause to this and more. Before we get started, though, nothing in this video is financial advice. I am not a financial advisor. I have no certifications or qualifications whatsoever to deal with you or your money. It's your money, your responsibility. With that said, let's go ahead and dive in. We are going to kick things off and talk about the Sprott Physical Uranium Trust, the biggest uranium fund in the world, collecting uranium as a vehicle. With that said, we have 61 million pounds of uranium currently carried by the Sprott Physical Uranium Fund. The stock price goes for $11.62, but the net asset value of the stock itself is sitting at $13.39. That means when you take into account all the uranium that Sprott holds, the stock should be sitting at a valuation of $13.39. So there's a 13.23% discount to the net asset value because it's sitting at $11.62. It's much cheaper than what it should be. And because of this, Sprott is unable to buy more uranium into the market. So why is this so relevant? Well, if we kind of zoom back, go down memory lane, you'll realize that the huge spike in uranium price occurred back here in the summer of 2021, as well as leading all the way up to the spring of 2022. So what does this have to do with anything? Well, it has to do with the fact that Sprott hasn't been buying much uranium over the course of the last year, and that could be the reason why the price of uranium has been fairly subdued during that time. Let's go ahead and dig into this a little bit more. So this is from the Sprott.com Physical Uranium Trust official page. We can see here they've got 61 million pounds of uranium. Again, like I mentioned before, sitting at a discount to now at 13.23%. And this looks at the total returns since inception when it comes to net asset value, the market price, as well as the bench spot market price. So when it comes to inception, this vehicle started out, I believe, in July of 2021. So since that time, U.U, Sprott Physical Uranium, has seen a 27.48% increase in terms of its net asset value. In terms of its market price, however, it's only gone up 23.82%. So there's a pretty wide gap between what it's worth and what it's priced at. And as investors, that's what we're hoping to capitalize on. The market doesn't always get it right immediately. There's a lagging effect when it comes to pricing. We want to identify areas in the market where the price hasn't caught up to the reality yet, and this is a reason, one of the reasons why uranium is so attractive. Just to me, for example, it's because the Sprott Physical Uranium Trust, it's gone up 27.48% in value based off its net asset value, but its market price has only got up 23.82%. The spot uranium price has gone up 30% since July of 2021. So there's a huge gap here. And this chart tells us that if we had invested $10,000 at the start of inception of this vehicle, right here, nonetheless, even though we've had a pretty long dry spell for about a year now, we would still be up to a little under $16,000. Market price versus net asset value since inception. This is really interesting and very telling. And I want you to pay close attention to this chart here, because this green line is the actual share price of Sprott Physical Uranium. This yellow line is the net asset value. So what the net asset value of Sprott physical uranium is. So it's price versus net asset value. And as you can see here, the times that we were fairly closely tracing these two lines were tracing one another. This stretches all the way from July of 2021. Okay, pay attention, all the way up until April of 2022. So really quick, I'm going to switch gears now. Now, this is the physical uranium price, spot uranium price. And what do we see from all the way up from July, which is right here, to April, which is right here? This is our big movement in uranium. This right here, this area here is where we saw a lot of the action. 110% increase, over a doubling in the uranium price. So, and ever since then, this green line, the share price, has been consistently below most of the time, which means that we've been trading at a discount to NAV for about a year now, with a few exceptions here and there. And we can see that here in this chart. So we've got our zero value here. So anytime this line drops below the zero value, it means we're trading below NAV, below the net asset value. And look at where we are here. We've been trailing below this. We've been in negative territory when it comes to our discount to NAV. We're currently at minus 13.23. Before that, we were at 10. But the consistency is we've been in this neighborhood for a very long time, which does not allow, which makes it, it doesn't make it conducive for the vehicle to purchase uranium off the spot market. And that's really what elicits the huge spike in the spot market, is when Sprott really goes in hard and heavy with their buying from the spot market. And we can see that here. This chart is Sprott physical uranium holdings. And you can see here, they started off with 18 million pounds at inception. And they very quickly rose to about in the 50 million area. So we had a pretty dramatic rise in their holdings all the way out into April. But since April of 2022, their increases have been fairly modest and subdued, like we talked about before. So we had about, where is it? So 55 million in April of 2022. Today we're sitting at about 61.7 million. So we've only added a little over 5 or 6 million pounds of uranium into the vault of Sprott physical uranium. Whereas we went from 18 million all the way up to 55 million within the span of several months, to elicit this huge jump, this huge 110% increase in the physical uranium price. And is this the reason why the uranium price has been so boring? We've been, there hasn't really been much buying lately. We've been sitting at this 61 million pounds marker for quite a while now, all the way stretching back to February of 2023. This chart also tells us this. It shows us the daily pounds of uranium acquired by the trust. And you can see here, all the action happened back here in this back half of the chart. That's where we saw the most explosive moves in uranium. It really does seem like the fundamental catalyst behind this huge shock, this huge spike in the uranium price, was the advent of the Sprott Physical Uranium Trust coming into the market, number one. And number two, them actually buying uranium aggressively because they were sitting substantially at or above NAV. And we've been below NAV for about a year now. And ergo, this is what we have. Stagnation. Not really stagnation. This support line's been steadily going up, but not the same level of price action that we had before. So, one more thing here, guys. The Sprott Physical Uranium Trust. This is something that I pulled up from their site. So this says, why own uranium? Well, nuclear energy provides the most reliable baseload. So when it comes to the capacity factor being defined as the measure of total amount of energy produced during a period of time divided by the amount of energy the plant would have to produce at full capacity. So uranium produces more energy during a period of time versus the amount that would have to be produced at full capacity. More so than any other energy source on this chart here, by far and large. Nuclear has the lowest full cycle carbon footprint. So not only is it incredibly energy dense, but it also has the lowest carbon footprint, even lower than the solar and wind guys, the renewables. Sitting here at 3. What is this? So this is CO2 equivalent emissions per gigawatt hour. So 3 CO2 emissions per gigawatt hour. All right. Number 3. The uranium production and demand imbalance could grow. So this yellow area here is total uranium production over time. This green line here is demand. So you basically got demand in green, supply in yellow. And you can clearly see the delta between the two getting bigger and bigger and bigger projected over time. Now we're sitting all the way out here in 2023. We might take a little while for this to expand out, but nonetheless, this is an inevitability. May not be an imminent thing. I don't know. That's why when I buy an investment, I don't focus and fixate on the short term. I don't care about short-term price action. In terms of making decisions of buying. I'm not coming in or out of the market. You're going to get hurt that way. Your edge is finding mismatch in price versus value in the market and sitting tight and being right. Of course, it's a lot harder to sit there for a prolonged amount of time because you might need the money. So I know it's not easy, guys, but you've got to work with capital that you won't need to touch for a prolonged amount of time, whether it be 5, 10 years or more. And that's where all these guys, Jim Rogers, Stanley Druckenmiller, all these guys made their fortunes by waiting. Warren Buffett bought Coca-Cola in 1980, bought Delta in 1980, sat on it. Now, granted, these commodities that we talk about on this channel, these aren't necessarily Warren Buffett style investments. These are cyclicals. There's going to come a time where we are going to have to sell. We're not going to sit through these until we're old and gray. I mean, at least not me. But these commodities react and behave in cycles throughout time. We had a big commodity super cycle in the late 2000s, early 2010s, and we had a bust in the for the better part of the 2010s, and now we're back in the midst of the very early innings of a commodity super cycle. And so this kind of looks at that cyclicality. So new uranium bull market in development? Question mark. Well, this is how things have shaken out before. We've had 3 bull markets so far, according to this chart. The first one started in 1973, stretching all the way out to 1978. So that was 5.5 years. And we saw a 629% increase in the uranium price. The second bull market, which is the one I just alluded to, was stretched from December of 2000 to June of 2007. That was a 6.5 year long bull market. And You were looking at gains of 1,801%. Oh, sorry, it's my cat. And then finally, this is most likely the early innings of the third bull market, which began, according to this graph, in November of 2016 up until today. And it's been 6.5 years so far. We've seen price action move to the tune of 183%. So that's what I got for you today, guys. It does seem like the price action in uranium is heavily correlated with Sprott buying into the market. And we just haven't seen that lately. Will we see more of that coming soon? I don't know. But we've been sitting tight. We've been steadily moving up. No big crazy actions, which is healthy for the market, quite frankly. You know, we've been shaking out a lot of the tourists that came into the space. And, you know, as the old saying goes, we've pretty much just filtered out all the weak hands and kept the strong hands. So with that said, if you enjoyed this kind of content, you enjoyed seeing my cat on your screen, go ahead and hit the like button, hit the subscribe button, and comment if you have any questions here. Let me know what you think, and I will see you in the next video. Bye.